It's theater. Your audience should read The Triumph of Politics by David Stockman, which details the derailment of the Reagan Revolution in 1980. The most recent Republican budget last week didn't deal with the deficit, never mind the debt at all. Let's put it in context. The aggregate US government debt includes $30 trillion net, trillion, in on-balance sheet obligations, and well over $100 trillion in unfunded obligations, entitlements, $130 trillion. To put that in context, it's more than 4 times gross domestic product. It's 26 times the gross federal budget before they spend a dime.
But Rick, he's going to sell a load of visas and it's going to cover the debt.
Elon is a known consumer. Now, I mean, I think how this ends. Yes, they cut some expenditures. And yes, they rejig entitlements. Old rich folks like me, they take away the cap on Social Security at the same time that they means test our benefit. In other words, they steal our contribution. And they raise the eligibility years. They have to do that. And then they inflate away the net present value of the obligation. In the 1970s, in the United States, we reduced the purchasing power of the US dollar by 75% in 10 years. That's a tax. But you can politically honor the nominal obligation if you inflate away the net present value of the obligation. That's how this ends. People need to understand that there's no arithmetic alternative. One more time for your audience. There is no arithmetic alternative. I think they're pretty good at theater. And I don't think, just like you said, we don't need to do the numbers. People don't like to do the numbers. It isn't until people do the numbers that they understand the reality of the situation. So I think we paper over the problem for at least 2 years because people don't want to face reality. When people talk about fraud and abuse in government, they're talking about benefits they don't get. The benefits that they get are necessary and needed. The benefits that other people get are fraud and abuse. You can pass this down the road for a while. We did it through the decade of the 50s and 60s. In the decade of the 70s, the war on guns, the war in Vietnam, the guns, and the war on poverty, butter, came home to roost. We lost both, of course. What we were left with was the bill. And in the 70s, we paid the bill by depreciating the value of the US dollar over 10 years by 75%. For people that have skills, for people who have developed their own franchise, they'll do fine. For the people who don't, they have a real problem. The income divide in the United States and globally has to do with the skills gap. People who are symbolic workers, people whose employment generates very large economic returns, will continue to do spectacularly well. This is not a bad economy for me. An economy where you have artificially low interest rates, as an example, which we do today, subsidizes people like me with access to credit and the knowledge to use it. For people who don't, this is very, very, very problematic. And the numbers that I'm talking about, the numbers that preclude the advancement of the welfare state from simple arithmetic purposes, are difficult for the people who rely on it, not for people who have alternatives like you and I. Higher, yes. Does it solve the problem? No. I know the numbers bore your audience, but the aggregate federal debt is $130 billion. The net trillion, the net revenue, the gross revenue of the US dollar, the government, before they spend a dime, is $5 trillion. You see the problem? The size of the problem is 26 times the size of the solution. You don't solve this on the edge. The difficulty is that the on-balance sheet obligations of the US government increase by $2 trillion a year. In other words, any savings is used up in reducing the deficit. The off-balance sheet liabilities, which are Medicare, Medicaid, Social Security, that increases by another $2.5 trillion a year. The deficit between on-balance sheet and off-balance sheet currently is the same size as gross federal revenues. Let's assume, just for fun, that higher taxes increases the revenue by 50%. The arithmetic means that the deterioration of the purchasing power of the dollar is the only way out. The narrative is unpleasant, particularly for a young person like you. If you're an American, you're going to pay into Social Security, and you're going to pay into Medicare, and you're going to pay into Medicaid. You're going to pay into the federal government pension scheme, whether you're a federal government employee or not.
Yeah.
You're just not going to get any benefit from it. You will get out of the trouble, but it will be extremely inconvenient. We got through the decade of the 70s. We did it by inflating away the net present value of the purchasing power. We did it by reducing American standards of living substantially over the course of the decade.
Yeah.
And that's what's going to happen again. In a biblical sense, there needs to be a reckoning. Maybe not as deep a reckoning as there was allegedly in the Bible, but certainly as deep a reckoning as there was in the decade of the 70s. The only answer I see, an old codger like me, I don't know what they pay me. Let's say they pay me $4,000 a month in Social Security. I don't know what they pay me, to be honest with you. They'll continue to pay it.
Yeah.
But that $4,000 will buy $700 or $800 worth of goods and services.
Yeah. Well,
that's what'll happen.
Yeah.
The tax rate, of course, the nominal taxes will increase as a consequence of inflation. The nominal benefit will stay stable, but the actual benefit will decline substantially. There's no one-size-fits-all answer.
Yeah.
It's very difficult for me to understand why somebody wouldn't own physical gold.
Yeah.
Because I believe that a replay of the 70s, in a financial sense, is inevitable. You need to look at what worked in the 70s. During the period where the US dollar lost 75% of its purchasing power and other countries did worse, the gold price increased 30-fold.
Yeah.
Now, will it increase 30-fold this time? Unlikely, because it's going from a higher base.
Yeah.
But gold has done well during periods of time when faith in fiat currencies has been shaken. And I think it will be, because of the arithmetic, shaken. So to start with, everybody needs to save something in gold. I'm not saying abandon the US dollar or the British pound. Maintain liquidity in the currencies that you spend, but maintain your savings in gold. If you are willing to do some work, if you have the psychological constitution to tolerate volatility and risk, then invest in the gold stocks. And if you have money left over, speculate in the juniors. Those are three different businesses. Savings, that's gold. Investing, that's the big gold stocks. Speculating, that's the gold juniors. They're three different businesses.
Yeah.
Everybody should be in the first business. Everybody should save in gold. People who are willing to do some work and take some risk and endure some volatility should invest in the biggest and the best gold producers.
Yeah. People
who are willing to do a lot of work, who want to outperform the market, who are seeking alpha, can speculate in the juniors, but they need to decide what bucket they're in and for how much. I would be delighted to be wrong.
Yeah.
When people say to me, Rick, when is the gold price finally going to move? I scratch my chin sagely, and I say 2000. Yeah. In the year 2000, gold was $250 an ounce. Now it's $28.50. Gold is up sevenfold in 24 years. It's gained 8% compounded. Gold has done its job for 25 years.
Yeah.
People, of course, are saying, when is gold going to double? I don't know. I don't care.
Yeah.
That isn't the purpose of savings. The purpose of savings is to maintain your family's purchasing power over time.
No, I agree.
And gold has done a spectacular job of that. It has done a spectacular job of that for 25 years. Late 27, 28, 29, subject to change. What I've learned in 50 years of forecasting is it's really hard to be wrong and really hard to be right, really easy to be wrong.
Yeah.
I'm attracted to commodities where the supply of the commodity is essential for the ongoing well-being of humankind, where those commodities are priced below the cost of production.
Yep.
At least in sulfide nickel production, we're there. You're seeing professional capitulation. Long-established developed mines that have $1 billion or $2 billion in sunk capital costs are being shut. It's a very, very good sign. The cure for low prices is always low prices. It's important that your audience understand that. But the other thing that's important for your audience to understand is there's a difference between the words inevitable and imminent in English. Will this occur in 27 or 28? I think so. Is it time to start learning about sulfide nickel deposits? Absolutely. Is it time to deploy capital? Only if you're Rick Rule. Only if you are patient, and only if you're pathologically cheap and unable, as I am, to pay up. Now, when you talk about the laterite nickel production, about 6 months ago, flew over southern Sulawesi and saw firsthand the outcome of that, the incredible environmental destruction that occurs, where the overburden is being pushed off the beach.
Yeah, stripping away our forests. And
square kilometers of mud plumes over the coral reefs. I don't think that will continue to be politically feasible in Indonesia or the Philippines. Just like I don't believe that the environmental degradation in far western China in the rare earths business will continue to be acceptable to the Chinese people or the Chinese government. So I think that the lower cost producers will end up being higher cost producers over time, because I think that the total cost will begin to be factored into the income statement in the nickel business, and by the way, in the rare earths business. Funded expansions suggest that the expansion of lateritic nickel production continues for at least 18 months.
Okay.
Funded expansions, not promised, not prayed for, but rather funded expansions. So I don't think that you are going to see a cessation in the increase in lateritic nickel production in the next year and a half, unless you saw vastly higher energy prices. What you are starting to see is the reduction in sulfide nickel production offsetting the increases in the ramp up of lateritic nickel production. So it wouldn't surprise me to see global nickel production increase by 3% compounded as opposed to 7 or 8. Meanwhile, the very low prices for nickel on the global market is discouraging conservation of nickel and is encouraging the development of technological applications for nickel across a wide variety of products. Remember that the cure for low prices is always low prices. You disincent production and you incent consumption. And when these lines cross in the out years, the cross is dramatic.